Deadline to file your tax return is just weeks away. Millions of Americans are waiting until the very last minute. It's very easy to do so, but now's the time to take action to avoid headaches and stress and just stop thinking about it too. So joining us now is Mark Stieber, Chief Tax Information Officer with Jackson Hewitt Tax Service. Good morning. Thanks for coming in so early to talk to us.
Good morning, Amanda. Yes, it's go time for everybody, especially those folks that are winning the lottery or they've got their final picks in the March Madness. No left time on the clock, as they say. Time to get your taxes filed.
Time to get them filed for sure. There's been some changes this year with tax brackets, and we're seeing some changes with retirement accounts and a cap on annual IRA contributions. How does that affect people?
Well, there were a lot of changes in the tax code. It's not a cookie-cutter year by any means. So if your plan is to just look at last year's tax return and do it over on your smartphone on the way in, that's a big, big mistake. There were tax law changes. There were revisions to the tax law to pre-pandemic amounts. There were life changes, and we're still dealing with the pandemic. People are working from home, starting side gigs, dealing with cryptocurrency. There's a lot to watch and a lot to watch out for. And as you just said, there's not many days left, only 3 weekends, and you certainly don't want to get caught in that last-minute surge of those 60 or 70 or 80 million people who really did wait to the last minute.
Gotcha. So what are your top tips for tax filing?
File early, and that's a little awkward here at the end of March. So I would say if you haven't gotten it started, get started. Find a tax pro and don't hurry and rush to the last minute and leave something off. Because here's a secret for your viewers. The IRS is not in the business of making sure you get all of your money. They're not like an airline or a retailer who says, oh, here's a credit, we're going to offset your cost. You leave it off, it stays off. It's just that simple. A lot of people are worried about making sure everything's on there, but the bigger mistake is leaving off a credit or leaving off a deduction or leaving off a benefit that could get you more money when this year refunds are lower and every dollar will count.
Yeah, every dollar counts for a lot of families. So does the IRS audit a specific number of taxpayers each year, and what are some red flags that could get you
that's a
audited?
hotly contested issue, and it's more myths there than probably how those guys escaped from Alcatraz. And the simple fact of the matter is there is not a specific number, but they do audit over 1 million returns, and that's even before their new 80,000 employees are coming online and $80 billion. So I'll simply say one of the big mistakes people make is thinking they can guesstimate or estimate. You want to put everything on your tax return and leave nothing off and nothing to chance. That's the first thing that'll get you a letter. The second thing is if your stuff looks really weird, if you make $50,000 and you got a charitable donation of $40,000, that's going to get some interest as well. So make sure it's accurate, make sure you don't guesstimate, and use a tax pro to make sure you didn't get bad guidance from your Uncle Bob, the tax pro. That'll keep you out of trouble.
Yeah, no, I definitely appreciate the tax pro we have. All right, let's talk quickly about the 1099K form. We have a lot of gig workers here in the Bay Area.
Yeah, the 1099K form, for your viewers, may not know that you've always had a rule to report income that you make on the side. There is no de minimis, not $1, not $1,000. If you make money, it goes on your tax return. Starting this year, supposed to be last year, if you get more than $600 sent to you like on an electronic format, Venmo or Zelle, you get a form from that platform, a 1099K. Typically, it's $20,000 or over 200 transactions. But they've started this year, 2023, for next tax season, if you have one transaction or $600 in electronic monies transferred, you're going to get that form, and so is the IRS. So it's really incumbent upon you to have good records, keep up with those monies, and then when you get that 1099K next year, you put that on your tax return and put it on correctly. That's not the taxable amount. That's the gross amount. You might have deductions, you might have expenses, but you will have an amount that the IRS will now know about starting this year, next tax season. Big change for everybody.
Yeah, a lot of good information there. Mark, where can people find you if they need more information?
Well,
like
we're
this?
at jacksonhewitt.com, www.jacksonhewitt.com. Put your zip code in, just like the pizza map. All the offices here in the Bay Area show up. You can walk right on in. You can make an appointment if you really want to be on time, or you can call for more questions. And we have a ton of videos on these and other topics if you need more information.
So